Okay, welcome back. You're listening to the weekend edition of the Korelin Economics Report. I'm Al Korelin, and I appreciate you joining me. Got a couple of friends with me. One old friend, in the sense that I've known him for probably about 25 years, Marshall Berol, who is the co-portfolio manager and co-founder of the Encompass Fund, a highly, highly successful mutual fund, very highly rated by Morningstar. The fund has an emphasis at this point in time on natural resource companies, which I think is really interesting. Another gentleman who has joined me right now is a friend by the name of Ray Nevis. Ray is an investor. He's a very, very interesting man. He is very definitely a sophisticated investor. I met Ray probably 4 or 5 years ago as he attends all of these shows. He wants to get firsthand information from the companies, and also he wants to get more of an education from the speakers at these shows, and I commend him for doing that because that's the exact reason that Big Al comes to these shows. Ray asked me an interesting question this morning, and that was, he said, I'm thinking that the resource sector this year is going to be characterized by takeovers, small exploration companies that have significant assets that will be prime for a takeover type situation. We did a segment with John Kaiser earlier today. John feels the same way. Marshall, what do you think about that first?
Well, I would certainly be in agreement with Ray and John and all the others who feel that way. We've already seen some merger and acquisition activity, M&A activity. We're seeing it with juniors. We're also seeing it with the senior majors, with the proposed merger, which is very likely to go through between Glencore and Estrada, which will make about a $90 billion market cap company. In the mid-tier and small junior mining company space, we think that'll be the case because the mid-tier and major companies have cash. They've been doing very well. The producers, they need to fill their pipelines, and the smaller producers and the exploration companies, the juniors, can do that, can fill their pipeline for them, and they've got the cash and the stock to be able to do that.
You know, Ray, what I found to be really interesting after our discussion this morning is just out of the blue when I was having a conversation during an interview actually with John Kaiser. John said, I think this year is going to be characterized by takeovers. What I'm curious about is what got you started along this particular thinking?
Well, probably listening to the very knowledgeable people in the business. I try to listen to just about everyone I can, and I think all the experts, Rick Rule, Greg Weldon, just about anyone that you talk to these days, think that's where the emphasis should be.
Well, I mean, I certainly agree with that. I think 2012 personally is going to be a very, very interesting year in the junior resource market. And the reason I say that is I would point to the disconnect between commodity prices and share prices that we saw for the most part, for the majority, I guess I should say, of 2011. I have noticed already, and this began right after tax loss selling season, I've noticed that most of my junior companies, the positions I have in these companies, are actually doing very, very well. And this is something that started towards the end of December. The question is, why? Marshall, I'm just curious. What do you think about that?
Well, I think the why is these factors we've just been mentioning, and particularly what you just mentioned. The fourth quarter of 2011 was very difficult for the market in general, but particularly difficult and a major downtrend for the resource companies, mining companies, and most particularly for the junior mining companies. The Encompass Fund, which I co-manage, is a no-load mutual fund. We invest in many junior mining companies, as you've mentioned, Al, and last year was not a good year for the Encompass Fund. We were down a considerable amount. In the first 5 weeks of this year, 6 weeks, the Encompass Fund's up 21%. That's for this year alone, and that's because these smaller companies have come back in stock price. They were grossly oversold at the end of last year, probably a lot of it due to tax loss selling. They've come back. I mentioned a number. Look at the website. EncompassFund.com for full information about our performance, and past performance is no guarantee of future results. But the fact of the matter is that the smaller companies have recovered so far this year in 2012, much as they did in 2010 and 2009 after 2008. We think that'll continue this year, and we'll certainly find out.
Ray, from an individual investor's standpoint, would you agree with Marshall and myself and that this could be a very, very good year in the market? And if you agree with that, tell us why.
Well, everything seems to be pointing in that direction, and it's all dependent upon the price of gold. And I believe with the current world situation, the debt situation, that gold has nowhere to go but up. And I think when it hits the magic 2,000 number, I think that's when the retail investors are going to start to really get interested.
And when you say retail investors, we talking retail investors in terms of buying the commodity or in terms of buying securities of mining companies? Securities
of mining companies.
I would agree with that. You know, Marshall, you guys got involved with the Encompass Fund 4 or 5 years ago. Interest of full disclosure, again, by the way, I am an investor in the Encompass Fund, and I have been for quite some time. I was a little taken aback when I heard Marshall say that the last year wasn't a good year, and the reason Big Al was taken back somewhat is that my investment is still up considerably, but then again, I invested in 2010. So overall, for me, it's been very, very good.
And overall, for the investors in Encompass Fund, it has been our 5-year record is a very good, very positive number. Getting back to one of the questions and the issues about mergers and acquisitions, I'd like to mention that we're seeing far higher than usual premiums on the mergers and acquisitions that have been announced so far. Generally, in the past, historically, the premium to the market price on an acquisition was 30 to 40%, say 35% premium, give or take. Over the last number of months, the premiums we're seeing by and large are more in the 60 to 100% range, and we feel that part of that is because the stocks were beaten down the end of last year, and the buyers realize that the stock prices are not fully representative of the value of the company's projects, and the sellers are not willing to take a 30 or 35% premium off the current stock prices. So you're seeing the merger and acquisition premiums being in the 60, 70, 80% range, and we think until there's a better connection between the commodity prices and the stock prices, you're going to continue to see very advantageous premiums from the standpoint of the sellers, the holders of the stocks that are being acquired.
Ray, I'm curious whether or not you agree with my wife and I in the sense that we're going to be pretty active. At this point in time, I would say we're going to be pretty active in the junior resource sector. And I am looking primarily at two areas. One area we haven't talked about hardly at all down here is energy. I've done pretty well on some energy issues. I think energy is an important place to be. There's only so much of it around. Mm-hmm. But I'm also, because, as you mentioned earlier, I'm really, really sold on increasing our position in the gold and silver sector because, you know, economically there's no place else to go. Financially, there's no place else to go.
Absolutely. You know, I've got a question for Marshall. And when did you start getting interested in junior mining stocks, and how long ago was that, and why?
Got reinterested in the gold and silver companies, fortunately about a decade ago, about 2001, 2002, after having been interested in gold earlier in my investment career, and the gold didn't work out for like 20 years, and then we got reinterested. And the junior companies probably in the last 6 or 8 years, as we came to become more aware of the industry and the dynamics of the industry and the fact that the long-term capital gains, which is what we at the Encompass Fund are seeking, are generally more likely to be obtained in the smaller companies, the junior companies.
There you have it. going to get Ray Nevis on the show more often in the future. It's always great to have a perspective from a sophisticated investor as opposed to just chatting all the time with government officials and letter writers and what have you. Appreciate your input for sure, Ray, and I'm going to be curious to see how the markets work out for you and I and our families in 2012. I share Marshall's enthusiasm and his optimism, and I think we got a heck of a year on our hands. Gentlemen, thanks so much.
Thank you.